Hey, what is up, everybody? This is Evan Carthy from evancarthy.com, and today I'm going to go over the S&P 500 because I'm seeing a lot of people talking about how now that price has hit that 50% retracement, both on the daily and a weekly chart. I've seen a lot of people talking about how it's crashing back down now that hit the 50%, probably come back down to levels to around 1880ish, something like that. So that's what I'm seeing a lot of people talking about. I disagree. If it does go back down, I do not think it's going to go down right away. If it does at all, I'll explain why and my reasoning for it, and go through a couple of the charts that have had a similar setup here in the past several years about when there's a big retracement and then what happened after that fact. But there's a couple other things within the S&P 500 that is going to be different than those other two. And so those other two that we're going to talk about are going to be oil and Bitcoin, because both of those have had a huge retracement down recently. So we'll talk about oil first. Looking at the weekly chart right here, here was when oil, excuse me, here was when oil first had this huge crash right here, and it was so dramatic that there really weren't any short setups. It just happened so fast as far as retracements. The only thing you could have gotten into is if you were just totally front running it and taking your shorts at the 23.6 Fibonacci extension level. Outside of that, there weren't any 50% retracements to get into right here. So starting off the bat, this thing was just pretty much straight down. And using this is a weekly chart, and you can see it just keeps on going straight down. And the only thing hitting was the 23.6 level. Take it right here, and then it starts retracing back to it. And there we are right there. That's why I did another video recently about oil, where I think that based on the couple of setups, it could go down sub $10 a barrel. Right now, today, what's today? April 10th, 2020. It's around $22.76. But anyways, we're not talking about this here or there. But as you can see, after it had that first major crash in oil, you see price rose up. And look what happened when we hit the 50% retracement right here. I'll draw a little box right here to highlight it. When price hit that 50% level, it didn't retrace straight back down. In fact, look what happened here. It took a good 3.5 years, and it created a triangle that before it crashed back down. So obviously these triangles and patterns are easy to see after the fact, which is what makes them great and the reason why I don't trade off of them. But for the sake of this video, I just want to show after price hit this 50%, it didn't come crashing back down. It went up from about, it waffled around between about, let's say the lows around here, $74 to the highs of $114, hit there in December 2010, and really didn't start breaking out of there until about September or October of 2014. So we had over 3.5 years for this thing to consolidate before it's made its next leg down over there. So that's why one of the reasons why I don't believe that the S&P 500 is just going to hit this 50% and create its next legs down. Now, this crash is a lot huger than the S&P 500. You're looking at the tops up here around 147, down to around $33 right there. So obviously the S&P 500 would have a whole lot longer to go if it was to get this sort of crash right here. But from this setup and this crash before it made its second leg down right here, it still took 3.5 years for this thing to get sorted out before it started making it down. And now it does look like it's making it down to its target down here. So we will see if it does go down and get right there. The next one we look at is Bitcoin right here. Now, as you can see over here from, you can't see on the left side of the chart over here, this is when the futures was created back in, I think, December of 2017. Yeah, December 2017 is when the futures contract was created. But up until then, it was just trickling along. Then it had a huge parabolic rise up right here. And right when the futures contract was traded, the institutions and banks started taking everyone's money that was invested in it. I'm sorry, I just think that's funny. But you can see from its downturn, it had a more structured approach than oil did in going down. Again, this is a weekly chart, so a lot more longer of a time frame. So, and one thing I want you to notice is there aren't any gaps in the chart, just like there weren't in oil. We can go back there in a little bit. I'm not going to, but there weren't any gaps. But in the S&P 500, I'm going to show you that there are some gaps. And then in another chart, we're going to look at the VIX, which is the volatility for the S&P 500. There's going to be a big gap in there. We'll talk about later. But anyways, you can see price came down here, traced back up to the 50%, went down to his target. So extremely structured. From there, it continued to go down a little bit further. So there's two ways you can either do this when you're drawing Fibonacci extension levels. You can either take the low since it went down further, but that is very aggressive. You see a lot of times it gets stopped out up here, or you can just take the last swing high, which would have been right there, which is the safer option. So we're going to go with that with it right here. And as you can see, price came back up, hit the 50%, came back down, hit the target. Again, very structured move down. This was so obviously run by all the big institutions, all the programs out there, that it was just marvelous to look back in hindsight and see how quickly they just destroyed the price of Bitcoin and took a bunch of people's money from it. So anyways, so price went back down. We move the Fibonacci anchor point down there to the low. You can see price come up, hit the 78% level. Now I consider that one to be over when it does hit the 78% and goes past it a little bit. Usually my stop is right up about right here, so would have been safe, but still I consider that definitely to be a trend change. So when that does happen right there, and anyways, this thing wouldn't be a valid short set view anyways, because the target you're looking at is in the negatives down here, and obviously you can't get into negatives unless it just isn't worth anything anymore. So that wouldn't be a valid setup anyways. But moving up to Bitcoin up here, what we are looking at down here is, now on the rise up, it wasn't as structured right here. You can see we have price come down here, shave off the 78.6, but not looking to take that long trade. Go up and hit the target up here. So now you have to figure it out. Okay, where's the next level going to be of how we're going to draw it? So for this one, we're going to look at drawing it right here using that top of that level. So price comes back down, almost hits 50%, never does, and then just blasts off from there. So this looks like to be a strong anchor point for the Fibonacci level moving up. So we'll just keep on moving up with it. You can see this is such a strong uptrend right here. Came back down, only hits 23.6, then we come down and hit the 50. Goes back up and hit the targets. Goes way on up here, and then now the downturn has started. You can see it started making that first leg up. There's that second leg down right there. Comes down, hit the 50-60%, but by then you gotta realize that the trend is over at this point. Comes down, hits the 78.6, and it's definitely over. So as you can see, that one was over. Price started the next move down. Moving down, comes up, hits the 61.8, goes down there, and it hits the target. Goes down there. Sorry, get my thoughts right here. Draw it from right there down to, yeah, that's the low right there. So we have that one. Price goes down here, hits target, so we just draw it down because that's our set anchor point high right there. Comes back up, hits the 61.8. And you can see down here, came down and perfectly hit that target, and now it's starting to trace back up again. So we'll go here, take that right there. So what we're currently looking at for Bitcoin right here is looking at a short at around 83.60. And then for the target area, looking at around 22.60. So I just want to show here real quick what would have happened to Bitcoin. I got a little sidetracked about the final target for it, but as you can see, Bitcoin had this huge run down right here, and then it went back up again. Now, obviously, the consolidation phase wasn't as much as oil's was, but it still had a consolidation phase. If you were looking at using that high to that low, you can still see when price hit the 50 up to the 61.8, it still waffled around for a little bit from about June of 2019 all the way until about September. So a couple months in there before it broke out and continued a new trend down for it. So it didn't hit the 50% and just retrace automatically for it. So we're going to look at the ES real quick, and then I want to take you over to the VIX, because the VIX shows something extremely interesting that I'm looking out for. So as you can see right here using the weekly chart, yes, price is coming up here and hitting the 50%, but there's a couple reasons why I don't think it's going to, based upon definitely the Bitcoin chart and the crude oil chart, where the price just hit the 50 and then took off straight down, creating a new leg lower right there. So if we go into the daily chart right here, there's one thing that I think a lot of people aren't looking for in the charts, or are overlooking the charts. So when we start having this move down right here, we've already had a 50% retracement right here. Look, price, here's the anchor, price come up, hit the 50%, came down and hit the target. That's a perfect 50% move right there. So that is actually the first move down. So what we'll do is we'll go draw the anchor from that last swing point high, start taking it down to the low and see when the 50% has been hit. So far it hasn't been hit, just hit the 23.6. And here is where it hits for this one right here. So now this is going to be its second move lower right here. Excuse me, one more right there. So price comes down. Oops, sorry. Oh, where was it? It was right about there. So what's happening up here is price is, sorry about that, we're using the swing low right here. We're actually going to use the low side of this right here. The safe one is using the swing high from the last move. The more aggressive entry is using the swing low from the last move. But for this one, the swing low works out better. So when price retraces back up here, and you see it's at 5061.8, and comes back down and hits the target area right down there. So now we just keep on drawing this lower and seeing what happens. Well, now you can see we got a little bit of resistance to 5060.1, but price has broken out of that 78.6 level. So the move to the downside is broken. And I think that's what a lot of people are missing. The move to the downside is broken. I know a lot of people are looking at this, and yes, that does look like that from the weekly chart, but the daily chart, its trend has already been broken to the downside, and is actually making a move to the upside now. So what I'm looking for is, when I'm looking for that first kind of anchor point for the low, I always look for come down to the 50%. It came close but didn't, so what we're going to do is look for where would be the next anchor point. So raise it up a little bit. There it is, hit the 50%, went up there and hit the target. Now what we're currently waiting for is to see what's going to happen with the price right there. Because if price continues to move up without any type of retracement, then that signals to us that we're either going to make the next retracement call from that swing low right there, or we're going to make it from that swing high. It just depends how far it moves up, and you never know until after it finally makes its retracement back down. Again, the safer play is doing it from the previous swing low. The more aggressive way is from the swing high right there. But that's what we're waiting on. We're waiting to see what's going to happen with this right here. Now it is in the weekly chart, real quick, like I mentioned a little bit ago. It is a weekly chart hitting that 50% level, but in the daily chart, it's already busted its Fibonacci moves down to the downside. So let's go over to the VIX real quick. Now this one just shows the volatility for the S&P 500 for it right here, and what TradingView only shows, it only goes back to about 91. I wish it went back to 87 because I like to see what it looked like then, but no matter. So here was the crash, the financial crisis crash right here. You can see the volatility was still higher than the high point of the current one we're in right here. And using the weekly chart right here, you can see basically just had a pretty much parabolic move up using that pivot point low, that pivot point high, just leaving it right there. Came down, hit 23.6, then just started front running it all the way to the top up there before it finally made its tracing back down. But what's more interesting about this time with the VIX, is look at this huge gap right here, and this is on the weekly chart. This thing is massive. So when price started crashing right here, the VIX just jumped up, just took off, and it's not even a body to body a body-to-body gap right here, meaning there may be wicks in between it, but the bodies haven't touched to complete it. This is a straight up gap right there. I mean, look at this. Use that. Oh, where's that? That to that. Look at that. From about 18.3 to 21.8 on the weekly chart of the VIX. This is going to come back and get filled, and when it does, that means the volatility has died down in the S&P 500 and is continuing to either going back up or it's just waffling around up and down, little moves here and there. But that is the thing I'm mainly looking out for right here, is this to come down and get filled. And you can even see it in the daily chart right here as well. You can see the huge gap in it right there. You can see when it started making its move up right here, it just straight took off. So using that swing low, going up to that swing high, excuse me, using that one, hit the 50, 61.8, went up there, hit the target, shows it just keep dragging it up, came back down, hit 23.6, and this is what usually happens when the moves are super strong like this. You're only going to get in between about the 23.6 and the 38.2, which I don't have drawn on here, but hit 23.6, went up, hit its target again, came down, hit the 23.6, hasn't reached its target. So technically it still is in this long setup on the daily chart for the VIX, meaning if the market does crash again, then we're looking at the targets up here for the VIX being about 92. But to be honest, with this huge gap right here, I'm expecting that thing to get filled rather than for this long setup. Let me just mark this here real quick. Rather than this long setup to get hit as well. And also, we actually have a really strong movement to the downside in the VIX. So using that swing high and that swing low right there, see price come up, hit between the 50 and 61.8, went down there and hit its target, retraced back up there super strong, hit the 50 to 61 perfectly, and is now moving back down. So if this move comes to completion right here, the early exit target we're looking for is about 24, but then all the way can reach down 50.8 and even down here to 5.8. But if it does come down here and hit 50.8, look at that. That's going to fill that gap perfectly. So that's why, in my opinion, what we're looking at for the S&P 500 right here is I'm not looking for a big move down right now. In fact, I'm looking for more of a move back up from where it currently is. Now, that doesn't mean, a year from now, 2-3 years from now, there could be another big crash in the market. But currently, what I've been seeing a lot of people talking about since price in the S&P 500, again, is hitting that 50% on both the daily and the weekly chart. I showed one on the daily chart. That's already been broken for it. So mainly it's hitting up in the weekly chart for it. They think now it's going to make the next leg down. That's why, based upon the VIX reading, I disagree with it. In fact, I'm inclined to say it's going to go the other way. I think that we're going to see less volatility, especially if it moves to the downside, until this comes down here and gets filled on the VIX all the way down to about 18, 19 or so here on the VIX. And it would set up perfectly for this current target for that short setup in the VIX that we're in, because the VIX and the S&P 500, they move inversely of each other. Then if we want to look at something a little bit further in the S&P 500, it's actually in a long setup here on the weekly chart. So if we use, I believe it was it that one right there? Yeah. So if we use that pivot low, it's one I've been using earlier, tracking this thing all the way up. See, it came down, hit the 50%, went up, hit the target. So now we just keep on drawing it up, hit the 50%, going up and drawing at the target. So we just keep on doing that. Then it's such a strong trend right here. It's only coming down to the 23.6 before it's coming up and hitting its target again. Here is the current move that we are in for the S&P 500 for long right here. It came down, hit the 23.6, so that started this entry level going up to the target. You see, we came very close from this move all the way down here from hitting it, never quite hit it, and now it's bouncing off again, find support at the 23.6. So even if I'm totally wrong on this, and price is bouncing off that weekly 50%, and it's going to go down and complete its target right here. Well, look where that puts us right there. Puts us right smack dab in the middle of the 50 to 61.6% target in this long S&P 500 futures move. So if it does that, then that definitely initiates the trade, which it already is in, and we'd be looking at the targets up here for about around 34.50-ish or so for the first exit target for the S&P 500. And lastly, there is one other thing I want to show you as well. Zoom in a little bit more. Let me go to the daily chart. There is also another gap, and not just a wick-to-wick gap, but a body-to-body gap, but a complete gap up here in the S&P 500. I'm looking for this to get filled as well. It goes from about, what's the high of this one, 33.12, and the low of that one is 33.28. So only about 16 points, but still it's a 16-point gap, and that's just only from wick to wick right there in the S&P 500. Let's see if we can find some kind of. Here is another gap right here. Now this one isn't as strong as this one when there's literally nothing in between them. You can see the wick has come down and gotten it, but one of the things I do like looking for to see where potentially the weakness or strength is right there is actually the bodies filling it up. The bodies touching each other right there. And as you can see, there's just a wick down to that body right there. And yeah, that's the only one here to the downside, but you have this huge one up here, and that's another reason why I think we're going to see more alongside an S&P 500 until that gets filled, and until this gap right here on the VIX gets filled. I just don't see us right now moving much lower, or especially having like a second huge leg down there in the S&P 500 currently at this time. Now again, like I said, I could be totally wrong here, which wouldn't be the first time, but based upon what I'm looking at here on the charts right there, I just don't see us moving down. Plus, look at this right here. There is a ton of support. Look at this candle right here. When price came off out of it right here, it closed on its high right there. Look at this. Every time price for the next 1, 2, 3, 4, 5 times it came down to this level in that day, never closed down on it. It would hit down in there and then move back up. Hit down, move back up. Came close, move back up. Hit down, closed on the low, but the next day moved back up and then moved off of there. So somewhere along this line right there, people are loading up on their positions. There is a lot of strength going in right there, and whoever it is, or the people driving this market, they were not letting price close in below this level again for the time being. So hopefully that made some sense in what I was trying to convey for this. I just do not think that this setup right here, from what, back to the weekly here real quick, I just do not think this setup right here, where a lot of people are saying is going to be the next leg down here right now for this P500. I just don't see it happening. In fact, I see more more upside until that gap gets filled there, or until the gap on that VIX gets filled. Or just like what happened in oil, what happened in Bitcoin, we can see price just kind of waffle around right here for the next either months to years, to where it can create maybe another some type of triangle that we've seen in it before it breaks down, just like it had in oil. Let me show you. This music's horrible. Like it had in oil right there, where it created that triangle before it broke down there to the next leg, consolidated, and then also not as long, but somewhat one in Bitcoin as well before it started breaking down to the next level. So that's the S&P 500 going into Easter weekend. Happy Easter out there. Hope everyone's staying safe from the coronavirus. And that's going to do it for now. Take care. Bye.